What's going on, traders? We're back again with another really great video. So this is something I mentioned earlier. We're going to talk about the stock AKER right now. Over the past 4 months, AKER has gone from about, I believe, about 12 cents, right? Like 12, 30 cents all the way to about, close to highs of $1 a share. That's about 800, it's like 750, 900% gain over the past 4 months, which is extremely big. Not to mention, it's not every day you're seeing stocks go from, 20 cents to $1, right? A 700, 900% gain is a really big gain, even in the course of 4 months. That means you're averaging about a 200% gain each month for the stock. Okay, so what we're going to do in this video is we're going to dive a little deeper into the stock AKER. Okay, I know a lot of people have been trading it. I know a lot of people traded it, may still be trading it, may be in it for long-term investing, maybe holding, right? This is in no way, shape, or form in a way to sway you to buy AKER or to sway you to make a decision to sell AKER. I'm here strictly to inform you about a lot of the information I dug up. I did a lot of investigating last night, and I've come up with a pretty good theory that this is just a simple pump and dump, which it most likely is. And a lot of people know that most penny stocks are pump and dumps. It's a no-brainer, but to be able to understand them and catch them in real time and really see what's going on, that's how you make the money, and that's how you protect yourself from losses. So this video is here to strictly inform you about all the information I have found regarding AKER. There are some things that raise red flags to me. Okay, so this is strictly for you guys to understand where I'm coming from, kind of my thought process behind AKER, so that you can make an educated decision. But I can guarantee you right now that you're most likely not going to find a more in-depth analysis on the stock AKER right now. So do pay close attention to everything that is going to be brought to you today. It is going to be a long video. I can tell you that right now. This is going to be long. If you want to come back to it later and watch it, by all means, you can do that as well. We are going to be going through 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. We're going to be going through, that's 10. We're going through 11 different websites. We're going to be going through FinViz. We're going to be going through a blog site. We're going to be going through SEC filings. We're going to be going through AKER's company. We're going to be looking at a look at another company. We're going to be going StockTwits. We're going to look at Twitter. We're going to look at Investopedia. So we're looking at 11 different websites that I went through, linking a lot of red flags to the stock AKER. So again, before we get started, this is going to be a long video. If you're going to grasp it all, get ready, because there is going to be a lot of information thrown at you right now. So just remember, you heard it here first on the Boiler Room. So let's go ahead and start sharing the screen and get into the nitty-gritty. All right, so as you can see now on the screen, this is the home page of AKERS. This is the home page of AKERS Bioscience Medical Tech Stock Company, okay? So as many of you know, AKER is a stock that has gone from, a really low price all the way up to $1, okay? So before we go into all of this, I want to first take a look at the stock chart, okay? And now let me get over to AKER. Okay, this is going to be some of the most in-depth DD you guys have probably ever seen on my channel and seen from a lot of people, and that's why I want to bring it to you. And it's going to take a long time to go through, but just bear with me. All right, so let's first look here at AKER. We're going to go to the daily chart. All right, so to give you guys a good understanding of it, let's even go 3 years. Let's go 3 years. So at one point in time, AKER was, at one point in time, AKER was $5. Right now, today, it's all the way down to about $1, right in the 80 cents mark, okay? So, that's a big downtrend for 3 years. It's basically been downtrending its whole life, okay? Sure, we've had a few moments where we pumped up, and had some good spikes and, had a party for the longs, right? They have all failed. What do all these pumps have in common? That once they pump up, they come right back down, right? Here, right back down. Here, right back down. Here, right back down, et cetera, et cetera. You get the point. Most of these longs or these pump ups don't last and they come crashing down. We know that. I talk about that all the time. There's really no difference there. I want to give you the whole aspect of it, though. So let's continue on. Okay, so let's continue here. So now let's come down to present day. And we're going to look at this on 100 and, well, we could do a 180-day chart, I believe, here. Right, so look at this 180-day chart. So this is like the most present time. This is over the course of 4 months here. So we'll kind of map those. We'll map out those areas. So you're going to have like, one's right here. Second month is like right here. It's like third, and this is 4. So it's been 1, 2, 3, 4 months that this stock has gone from 11, 12 cents all the way up to $1. This so far is about an 800% gain. That's really, really big. That's a phenomenal long bias trade. Really, really big gain, right? That's huge. Very, very big. So understand that AKER over 4 months is basically gone up 1,000%. That's nuts, okay? So we know that. That's nothing new. We kind of know that. You're just still getting a different perspective on it. But let's talk about, this particular day and time. Let's talk about this moment right here. Let's focus in on this area. And the only way we can do that is, figuring out what day was that? When did that actually happen? Okay. Let's see, we can look down here at the date. That was about 12/1, 12/4. So let's go back into our news channel here. And let's see what we find. Okay, let's see what we find down here for the dates. What was that date? 12/11, 12/12 right there. So let's scroll down. Eventually, we're going to come to 12/11. AKER Bioscience files to sell 13.6 million shares. What do you know? Huge dump. Next thing you know, we keep going up. You keep scrolling, keep scrolling, keep scrolling, keep scrolling. On 12/21, right here. So 12, where are you at? 12/21. So right in about this day and time, right? So right about here on 12/21, AKER Biosciences announces a closing of basically 7 million shares of public offering. That's not good news. Okay, that means the company's struggling. So, they're closing deals to bring in more money to, keep advancing, keep progressing, right? It's kind of the same thing as reverse stock splits. Essentially, these public offerings, and when companies sell a bunch, that's a sign that maybe the company's struggling. They may need money to spend on new advancements, new studies, new drugs, etc. Right? So, to put it in simplest terms, public offerings are usually not a strong sign for the stock. All right. So now that we've got that covered, and please, we'll go over questions here in a little bit. We got to get to a good kind of halfway point. We're too involved right now. So let's keep going. All right. So on 12/21, this arrow right here, right in this date and time, they close. They announced the closing of a 7 million public offering. Okay. That's interesting. Okay, let's scroll up, keep scrolling, keep scrolling. You'll see here on the date 1/2 from Benzinga, a 13G filing shows Bigger Capital reporting an 8% stake in AKER's Biosciences. Okay, what that sounds like right there, it's the same thing as you'll hear a press release, on any other stock. Sometimes you'll hear them like on Snapchat or Netflix or Google or something. It'll say JP Morgan has increased their stake in this company by 5% or 10%, or you know, Amazon, something like JP Morgan or Deutsche Bank announces they have a 5% stake in Amazon. It's very similar to that type of news where a bigger investor or company institution has to announce, you know, that they have a stake in the company. You know, by the SEC, they have to like state that they have a stake in the company. And when those kind of news releases or press releases come out, that causes retail investors or the everyday investor or maybe some other smaller company investors to go, oh, well, if this big company has a stake, you know, if this big investor or big institution has a pretty big stake in this company, you know, I'm going to try and follow smart money, or I'm going to think that, well, maybe this company is good. If JP Morgan or bigger capital is announcing that they have a big stake in the company, maybe there's something that we're all missing and we should start focusing, right? So this is just a simple news release that was there to bring in the attention of new investors, but is also necessary by means of legalities. Bigger capital and AKERs, I mean, they have to provide that information to the public, okay? So it's not like they send it out to attract people. They legally, you know, they do have to file, okay? So let's keep going. So bigger capital, you can read this, shows an 8% stake in AKERS Biosciences. And that was released on 1/2. Okay, so if that was done on 1/2, I was right about, where is that? And I'm just going to get off this screen. I'm going to take these older drawings off. And I'm going to look back at the 1 year, 1 day. This will make it a little easier. Okay, so it was done on 1/1. So that was right here. Right here on 1/1 or 1/2. That's the day that the news release broke. Next thing you know, volume, right? Volume starts, where am I at? Volume starts to pick up, right? So on 1/1, right here is when that news release broke that bigger capital has a stake in AKERS Biosciences. Okay, sure. Well, you want to know what that stake means? This stake means that when this public offering right here, let me scroll down just a little bit. Okay. Right, here we go. We have bigger capital, and that was their 8% stake in the Bioscience AKER. Right, and then you also have the public offering right here. So the company AKER just made a bunch of shares available, just closed a public offering that basically just went straight to a bigger capital, right? So this company basically says they're doing really shitty and their stock dumps out. Then they also say they're going to do like a public offering right during here, okay? Then they say they close the offering somewhere in this time of 7 million shares. Then on this date right here, bigger capital announces we have an 8% stake. All that really just happened was this company did a public offering, transferred, or shall I say, bigger capital just bought up all those shares. Then they released the news that bigger capital is holding a 8% stake in the company. So naive investors are going to go, oh, well, maybe it's a good time to buy. So then next thing you know, volume starts coming in and it starts jacking this price up. All right. Now let's dig a little bit deeper. Okay, so what we've gone over so far, and let's recap. What we've basically gone over so far is that bigger capital has an 8% stake in the company right after the company basically announced they're doing a big offering of shares and the price dumps down to 12 cents. They close a 7 million share offering to bigger capital. So now bigger capital have 7-something million shares of their company at probably like 12 cents a share, okay? So you just got a huge, huge deal on 7 million shares, okay? Now let's step away from the charts. Okay, we're going to step away from the charts completely. Now let's go here. Okay, so here's AKERS Biosciences. So what did I do? I'm going, okay, the stock looks like it's getting pumped up, but why is it getting pumped up? And the most relevant news that I can find is some press releases, maybe about some FDA, but I was really curious to find out who exactly Bigger Capital is. Okay, who is Bigger Capital? So I come over here and I go and I figure out who Bigger Capital is. Who is this investing group? And this is their website. This is Bigger Capital's website. This right here is Bigger Capital's website. So I'm like, right? A big investing company, and this is what your website looks like. Now, I'm not going to judge and say that this person's absolute garbage or whatever this is absolute garbage. I'm not going to do that. But you would think that, you know, someone buying 7 million shares, right, of a company would have a little bit higher end of a profile on their website, maybe a little bit better than this, right? I mean, because you could simply go to, let's just do this real quick. You could simply go to Google, right, and type in like JP Morgan or something like that. All right, JP Morgan, and let's see what JP Morgan's website looks like. Like, whoa, like that, this looks pretty high end, pretty good. And then go back to Google, right? Let's like get Bigger Capital. Nothing against them. Could honestly be one of the best investors in the world, this investing company. When you go to it, it's kind of like, okay. So let's scroll this page and let's see what this Bigger Capital offers, okay? MRI, what's MRI? MRI is an extremely low price penny stock. What else do they offer here? Another, more talk about MRIC penny stock. So you scroll down the page and you'll come to find that a lot of the information revolves around the penny stock market. And if you do a lot of research on these penny stocks, most of them have done similar moves to AKER, where they've dumped out, they've gone through public offerings, they've done reverse splits, et cetera, et cetera. You see where this is going. So I look at Bigger Capital, this investing company that's took a huge stake in AKER, that's starting to entice new investors to buy, and I go, well, all right, well, let's go with it. So who actually owns and runs Bigger Capital? So that was my next question, is who actually owns Bigger Capital? So I started playing around. I looked at contact. I'm like, who is this? And, you know, I'm still can't find him. So I'm like, oh, Michael Bigger. So then what did I do? I go and I look into Michael Bigger. I want to find out who is running Bigger Capital and who's behind this huge investment of AKER and why are they? So let's see what comes next. Well, before we get there, I'm going to take a step back, and so I'm looking into Michael Bigger, I'm looking into Bigger Capital, and I go, well, let's see how legitimate is this. So let's go to AKERS Bioscience. Any publicly traded company legally has to provide their SEC filings, 8Ks, 10Ks, quarterly reports, earning reports, yada, yada, yada. You can find all of that on any single company's website. They'll usually have an investor center. They're going to have some spot where you can find the filings, okay? So if you come up to Investor Center and you go to US and SEC filings, let's go there. And not to confuse anybody, but let's go back to Thinkorswim. Oh, not that. Get out of that. Let's go back to Thinkorswim. Remember what it said? It said Bigger Capital. Oh, wait, hold on. Where'd it go? Where's it at? There's so many fine prints. There it is. Remember on 1/2, it says that 1/2/18, Benzinga sends out a news release that a 13G filing report shows Bigger Capital reporting 8% stake in the company. Okay, so all we have to do is go to the filings on their website, and all we have to do is search for 13G. That's the filing that we're really looking for. We want to find out who's Bigger Capital, what's Bigger Capital's purpose, who is the Michael Bigger, who is running Bigger Capital's investment decision behind AKER. And what it said was Bigger Capital files 13G. So if we file and search for 13G on AKER's website, we're going to find the most recent filings. And the only recent filing that's been done is for Bigger Capital. So let's go find it. So we come down here to 13G, and remember we said it was on, wasn't it 1/18? Wasn't that when it was done, or 2/1, or 1/2 on okay, it's on 1/2/18. That's when it was filed. So if we come down here, we'll go, well, which one is it? January 2nd, 2018. Filing for a 13G. That's got to be bigger capital. So let's pull it up. Pull up a PDF. I'm not going to run through what everything here means, but you can clearly go through and it'll say shared voting power, that's 2.5 million. So 8% stake. Okay, so it is legitimate. That is the news. That's the news we heard was this. If you go down to the bottom, it'll show you who purchased it. What do you know? Michael Bigger Capital Fund GP LLC is a part. Okay, so it's all true so far. It all makes sense. Bigger Capital does in fact have a big stake in their company. So let's dig deeper and let's figure out who is Michael Bigger, who's behind this. Let's see his thought process. Let's see some of the stocks that he recommends or picks if we can find that. So if you go ahead and you go to Google and search up Michael Bigger, what you're gonna find is a profile of Michael Bigger. It'll look like this: 33,000 tweets. That's a shit ton of tweets. He's got a good amount of followers, 12.9K. So you got to think he's pretty respected. Well, let's go through it. The stocks he's recommending and looking at is EBIO, low price penny stock, DFFN, low price penny stock. There's talk of Amazon here. What else do we have? You keep going down. AKER, AYTU. We're going to talk about AYTU here in a little bit. AYTU, MRIC. MRIC was also on his website. AKER. So everything revolves around very low price penny stocks that are very similar to AKER. If you go to the website too, on their website, it also says that he is an investor in low cap stocks and startups. Most often low cap stocks and startups fail and don't ever really do anything. So you can't think to yourself that Bigger Capital is investing in small cap and lower cap startups to invest for long term, because any investor knows that most penny stocks are going to fail. So to be an investor in that market, you can never really be expecting to stay there long term, unless you were to get really lucky and pick something like Amazon, which that's like 1 in a billion. Okay, let's be honest. So to be an investing group, an investing fund or business, and your primary focus is small cap and lower cap stocks, you already, if you're anything of somewhat of an intelligent investor, you know that you're probably not going to be holding very long term for these penny stocks or low cap stocks. We're not going to talk 10-15 years. There's no freaking way. Okay, so you automatically got to be thinking this is more of a short-term investment. Okay, so if you go through his Twitter page, all you're going to see is basically low cap penny stocks. Let's go over to StockTwits. StockTwits is the same, but what is interesting here is I read his little personal description and about Michael Bigger, whoever, I don't know who this guy is. Okay, I'm just going off what I'm giving. Okay, going off this information here. We'll get to questions here in just a little bit. We're going to be finishing up here pretty soon. All right, so you have Michael Bigger. Read his stuff here. It says, Michael Bigger is an investor and a trader who has been involved with trading technologies for more than 20 years. He runs the Bigger Capital Fund LP, and he manages money for institutional investors. Very important. He manages money for institutional investors. That's almost backwards, because what we're always taught is we should give money to institutions to invest for us, and this is the flip-flop. He is saying that he manages money for institutional investors. Interesting, very interesting. Let's go back to, I believe it's this. Let's go back to Twitter real fast. Scroll back to the top. Is this it? Or was it on Crunchbase? It might be Crunchbase. Hold on, let me look something up real fast. Okay, yeah, this is what I want to show you. And then this is another, like a little Crunchbase site talking about Michael Bigger and Bigger Capital. It'll come to say Michael Bigger is an investor and trader who's been involved with trading technologies for more than 20 years. In 1992, Michael joined Citibank as a head trader of U.S. single stock derivatives, where he managed a $5 billion portfolio of equity derivatives. In 1998, He joined D.E. Shaw and Co. LP to trade U.S. derivatives. In 2000, he started listing equity options, blah, 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 keep going, blah, 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 blah. Basically, what that just told us is this guy does know how to invest money based on where he's worked. He's a skilled investor. Based on where he works, Citibank, some of these other bigger places, he probably knows some people on the inside. He probably has buddies that are institutional investors that work for big banks. So this guy probably has some ears on the market, in pockets, in deep, right? He is in way deeper than I am, than you are, than someone using Robinhood. So if this is based on what we're reading here is true, this guy knows some people, right? He's got to know at least somebody on Wall Street, you'd think, or some big bank, right? So the chances of this guy having some insider knowledge is far greater than us, or what he may be doing is definitely a whale, you could say. All right, so now that we have some background on the Michael Bigger, where he's come from, let's continue down here to Bigger Capital. So this was a blog and kind of like a press release done in January 23, 2015. So this is about 3 years ago, right? Or 2 years ago or whatever. So in January 23, 2015, this is the headline reads, Bigger Capital warns against standard general conflicts of interest at American Apparel. Okay. What is American Apparel? American Apparel was a stock that was trading around a couple bucks a share, I believe, and now it's worth it's only worth 60 cents. It's only worth 60 cents nowadays, and it's traded on the OTC market. Okay, it's not even traded on any major exchange. American Apparel is now traded on the OTC market. Last I knew. Okay, want to see where it gets really interesting? This what we're about to read here. Board of Directors, American Apparel, blah, 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 blah. Dear members of the Board of American Apparel, what you're reading right here and what you're actually looking at, this was, shall I say, a letter that Michael Bigger sent to the Board of Directors of American Apparel back in, January 23, 2015. This is a letter that he actually wrote and sent into the Board of Directors for American Apparel, and you can see down here at the bottom, it'll say, sincerely, Michael Bigger, Bigger Capital Fund, blah, blah, blah. Basically, this whole thing goes on to say some things about Bigger Capital, right? And it goes, basically saying that there seems to be some unstable members of the board. Since I'm such a big investor, I'm getting nervous about who's on the board, and if you guys don't change your act, we're going to have to make some serious changes. So how does someone like Michael Bigger, an individual investor, have such sway on a company? Well, if you become a big enough shareholder of a company, you will have a seat on the board of directors. Or if you become majority shareholder, you now have the most control and the most power over that company, and you are the most powerful board member when you become a majority shareholder. Okay. So this is a first letter that was sent back in like January, right? January 23, 2015. Basically, this was a shots fired like, hey, y'all better get your act together, blah, blah, blah. I'm going to come in and I'm going to do whatever. Okay. Blah, blah, blah. Okay. So then let's go back. Here's another one. This was Bigger Capital delivers second letter to American Apparel's Board of Directors, except this one wasn't as nice as the first one. This one I'll read to you a little bit. It goes, in our letter of July 17, 2014, we demanded the immediate resignation of David Danziger, Alan Mayer from the board. We did so because we believe blah, blah, blah. They're not fulfilling what they should be doing. And then it keeps going on to say that we are a majority shareholder. Look at the company share could be worth more than $2 per share. Nowadays, it's traded at, or did it say the price here? I can't remember. But back in the day, it was trading probably close to $2 a share. Now it's trading like 60 cents. Okay. Then it goes on to keep saying some more stuff. Okay, and then it goes, in summary, we want to stress our conviction that this is a critical time for the company. It is imperative that the board must conduct itself in accordance with highest governance standards, representing fairly and vigorously the interest of all shareholders, providing transparency, full disclosure of all material events, and addressing blah, 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 blah. Basically, what happened was Michael Bigger eventually became a big enough shareholder, or Bigger Capital became a big enough shareholder to have say and sway on the board of directors. First, they sent them a letter saying, hey, we would like it if you guys would consider us and keep us in the loop, blah, blah, blah. We're trying to be friendly. Can you guys please do your part and do your job correctly so we can grow as a company? Because at this point in time, he was a big shareholder. And then by now he became a majority shareholder, and he was able to fire these two board members, right? Because he became a big enough shareholder. Okay. Interesting. Very, very interesting. Okay. So let's continue here. Let's continue. And remember, this is American Apparel, who is no longer, even trading on any major exchanges. Okay. So let's dig a little bit deeper. Remember when I told you that they had that Bigger Capital scheduled a 13G? If you were to come to Investopedia and just look at it, a 13G must be filed when an individual investor and or like little small group or company owns more than 5%, right? 13G. Hold on, let me just double check something. Okay, here, let me step back. So when an individual investor acquires a significant ownership in a company, or basically they acquire more than 5% stake in that company, that individual investor and company will have to file a 13D. Okay, they'll have to file a 13D, and this is required so that the SEC knows that this particular investor or company owns at least a 5% stake in the company. But a 13D means that for whatever reason, this investor, when you file a 13D, is saying that this investor has a 5% stake in the company, but they don't plan on using their stake in the company to extort any extreme measures, to abuse any power. They just personally have a big stake in the company, and that could be because they think it's going to go big. They really strongly believe in the company. But when you file a 13G, this is when somebody has at least more than a 5% stake in the company. And then here you go. Any investor with over a 20% stake must automatically file a 13D, regardless of whether to exert control exists. Okay, so I apologize. It's the other way. The 13G here is a filing that basically says you have 5% stake. If you file a 13D, that means you've taken more than 20% in the stake, and you at this time may actually start to exert control over the company. So what's going on? What's going on with AKER right now? Well, what's going on is public offering, Benzinga 13G filing shows Bigger Capital reports 8% stake in the company. If Bigger Capital wants, they can essentially file for a 13D, and they can start exerting control over the board if they get enough shares. See where I'm going with this? Bigger Capital is got a big stake in the company. If they file a 13G, they could go as far as what they did before with American Apparel. Remember, Bigger Capital fired 2 board members off of American Apparel. When you file a 13G, that means an individual investor or some bigger person has come in and they have bought a 5% stake or greater in the company. If they file a 13D, this is where they can start to use their stake in the company, their power in the company, to sway some decisions. That's why people file a 13G. A 13G basically says, hey, Some stuff might be going down in this company. There may be a shift change in control on the board. People may get fired. That's basically what a 13D is standing for, that shit's about to hit the fan with this company. Okay? Let's go a little bit further into all of this, okay? The financial filings here on AYTU. So let me step back for just a quick second here. We're going to step back for a quick second, and then we'll get into everything. So far, let me get these back on. So far, what we found out is that Bigger Capital has a huge stake in AKER right now. They've been known to have huge stakes in companies before, and now they're trading on the OTC market. Okay. We know from what I'm about to show you is that Bigger Capital has just now taken a position in another company very similar to AKER. Okay. After AKER dropped, went super cheap, Bigger Capital bought it up. This same pattern's happening with another company. Okay, so that's what we know so far. I'm going to show you a little bit more. So are things starting to make sense now? AKER price goes to 12 cents. They do a huge public offering. 2 days later, a week later, Bigger Capital has an 8% stake in the company. They file a 13G. If in fact, well, then the price starts pumping up. And then if in fact Bigger Capital were to get enough shares, they could file a 13D, start taking control over some portions of the business, have a big sway in what goes on. So are things starting to make sense? I think so. Now I'm going to show you one more example. There's more that I found, plenty more than this, but I'm going to give you guys something to watch. I'm going to give you a stock to watch because that's how much I love you guys, okay? Does this mean the stock is going to explode? Maybe, maybe. Does it mean it's way before the move? Yes, the move hasn't even started. Am I saying invest all your money and hard-earned money into the stock? No, but I'm going to tell you what ticker it is so you can watch it too. All right. So let's go back to sharing the screen. And now we're going to look at AYTU. AYTU, financial filings, blah, 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 bioscience company, bioscience. Okay. So let's go here. Let's look at AKER. Remember AKER? Dropped down to 12 cents and boom. Public offering, Bigger Capital takes a huge stake in the company. Wait, we'll get the questions here very soon. Let's go to AYTU. What's AYTU look like? And let's pull up a chart of AKER. Is there anything that seems relatively similar? Like they both just dumped down and now they're 12 cents and this one's 42 cents. And then all of a sudden you're starting to see an increase in volume, right? So you have the dump, zero volume, no volume here. All of a sudden there's volume after this goes down. All right, so dump, volume here, no volume, right? No volume, volume picks up after the dump down there. Okay, so right now, AYTU is at a very, very low price. So let's do some research. Let's figure out what the hell's going on. Oh, shit, what do you know? On 3/8. So just 2 weeks ago, Benzinga, AYTU Biosciences, 13G from who other than our best friend, Bigger Capital, right there. Bigger Capital, 7.4% stake in the company. What happened over here? Remember what happened over here, don't you? With fucking AKER. Let's do it. No one else other than our best friend here, Bigger, where am I at? Bigger Capital, 8% stake in the company. This is all taking place right here. This right here is all taking place right here. What happened after the big stake? What happened after all that, all that took place? That trading, well, that's an ugly one. Let's not even use that. All right, this is what ended up happening. Now, if you come and you look at it, it says that bigger capital has taken a huge position, right? What happened? Wait. Better yet, what happened? What happened before AKER bought, or sorry, what happened before bigger capital bought AKER? Let me do this. What happened before bigger capital bought AKER? A public share offering. What happened before bigger capital bought AYTU? An even bigger share offering of 12 million. So this one was only 6 million on AKER. This one's for 12 million public offering, and they take an 8% stake in AYTU. If you go, and then if you go to AYTU, you go to investors, financial filings, right? Let me clear this old stuff off. Financial filings, view all filings, and then you can come into here and type in 13G. And then what do you know? You're going to look for one around 12/3. Oh, this is probably, wait, which was the date? It was on 3/8. So you come back over to their website, and you'll see that on 3/8, Rich is right here. Open this up, boom, scroll down. There's a huge offering, huge buyout. And who is it by? Nobody other than Michael Bigger and Bigger Capital Fund. Interesting. Very, very interesting. Wouldn't you guys say so? So, with that being said, what do you think about that, right? Pretty interesting stuff there. There is also some other people that I'm actually looking to, and other funds that I'm looking into that show the same activity as Bigger Capital, Michael Bigger. Now, am I saying that Michael Bigger is committing fraud? No. Am I saying he's doing anything illegal? No, I'm not. Is he a shady investor? Is Bigger Capital a shady investor? They're shady. No, I'm not. I don't know. But from what I am looking at, I'm seeing very common patterns that, in my personal opinion, I would, think are manipulation. I don't know, whatever you want to call it. But you're starting to see and pick up on what I'm talking about. So very, very interesting. So to all of the traders out there and everybody watching AKER, if you want my personal opinion, yeah, watch it closely. Is it going to sell off tomorrow? Maybe not. Is it going to go to $20? Maybe. But what I'm telling you is there is some very interesting activity going on with AKER. And what I would say is the stock is up 800% in 4 months. How much better are you really going to do? I would take profits when I was up. Okay. So right now, let's take some time. I would like to maybe go over some of the questions any of you guys may have. Or anything in that nature. All right. So, there's going to be a lot of questions. I know I'll try and cover as best as I can here. So let me kind of scroll up. Let's see. So Bobby Bob, guys are asking, do you wait for the 13D filing? Well, not necessarily. I mean, like in relation to AKER, right? If there's any similar pattern that's going to happen with AT or AYTU or something like that, if there's anything that's going to happen with AYTU, I think it would be very similar to what you're seeing with AKER. If the pattern repeats itself, if this is in fact some manipulation pumping going on, I think we would see that, right? Now, ideally, if there was a 13D filing, there's possibility there could be a change in board members and a change in control. And let's just say that the idea was to take control for negative purposes. Yeah, if I was a majority shareholder, I could dump all my shares and I'll sell them all off, and then, the stock will dump. right? You know, if I become the majority shareholder, I'm like, screw my company, I'll just sell them all, right? What's going to happen? So again, right? So pretty in-depth analysis. What do you guys think about that? Let me know. What are the questions, if there is any? I mean, that was pretty clear-cut, good stuff there, right? All that I ask of you guys, all that I ask of you for that long video that hopefully will help you guys with AYTU if it really does take off. All I ask you guys is to leave a like, subscribe if you do like the channel and like what you're seeing, and please do share the video. I would really appreciate that. This did take a lot of time and a lot of effort. I hope you guys like it. I hope this maybe opens some of your eyes. NASDAQ SE, thank you. You know, these are just, this is what I do every day. I sit around and play with my stocks. It's fun, right? So that's all I have for you guys today. Thank you once again for tuning into the live stream. Let me know what you think in the comment section below. If you have any questions, ideas for future videos, but do remember that you heard it here first on the Boiler Room. All right, guys, take care and stay green.